Hello traders, Gary Wagner here, 12 noon in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday. It is March the 13th, 2020, and this is the Daily Report for Gold and Silver, our weekend review, and we've got a lot to cover. The Dow Jones specifically had one of the most volatile weeks I have ever seen. In fact, yesterday we saw the market decline in terms of its loss, the biggest decline since 1987. And then today, the 2,000-point rise was the biggest jump in a single day in the last 11 years. That's extreme volatility. The metal sold off pretty much all week. We'll talk about that as we pull up our technical studies and price board. But it ended on a very sour note, losing another $60 on top of the other losses accumulated this week. It was certainly a tough week for traders and market participants. Let's take a look at the price board. Gold has been trading under pressure the entire week, but it capped it off with one of the largest falls we have seen in a while, down $61.40, currently at $1528.90. The key is that yesterday it closed just at the 50-day moving average right here, and today it closed below the 100-day moving average. And a lot of that had to do with strength in U.S. equities, a 2,000-point gain in the Dow Jones Industrial Average, 23,185. But the precious metals were hit hard across the board, with the biggest hit in palladium, a net loss of $256.90, 13.5% at $16.58. And to think recently it was just as high as $2,800 about 3 weeks ago. We've seen that really fall from grace. Silver took a hard beating also, down $1.32 below 15, 14.68, down 8.25%. And the one metal that escaped having a tremendous drawdown was platinum. It only closed down by 2.37%. Now, the dollar index had a lot to do with that also, up a full percentage, and you can see that it had a very, very strong week. Lastly, we'll look at Bitcoin. That has fallen dramatically, down today $690 at $53.20. The only way to put it is that gold has been hammered all week. All 5 trading days had consistently lower closes, with the majority having lower lows and lower highs. We ended up Friday with the largest decline of the week, down $61.40 at $15.28. Now, what is most noteworthy in terms of the technical indicators that we look at is that we saw yesterday it broke below the 50-day average. Now, today's candle actually broke below the 100-day moving average, and we are pretty darn close to the 200-day moving average, which sits at 1496, and current pricing is 1428.90. Now, believe it or not, that was a fairly mild decline when you look at what happened to palladium, and we will look at a chart in a second. Nonetheless, we saw a tremendous move to the downside. When we look at gold's pricing on a weekly chart, it is amazing how large of a candle we are looking at. This is the largest candle, of course, on the screen, but I have not seen this kind of move in quite some time. Also, it is truly an engulfing bearish, and when you create the weekly charts, you have to modify what we're looking at from a Fibonacci retracement standpoint. Because on a daily chart, I'm fixing this price point right here as the beginning of the rally, and on a weekly chart, you fix this as the beginning. Our retracement levels are different. So in terms of a long-term retracement, we're looking at the market just at the 38% retracement level. It most likely could go as low as 1440 on a long-term basis. We are currently flat, and my recommendation is to maintain our neutral stance throughout the weekend. However, in terms of the precious metals complex itself, the greatest percentage drawdown today was most definitely palladium, down 13.42%, a drop of $256.90. We're looking at a weekly chart. We'll change it to a daily in a second, but look at how this market broke. It actually broke below the 0.618% retracement and is currently trading just slightly above it. I think the most incredible thing when we look at a longer term view of palladium is the fact that when we put up our long-term Fibonacci retracement, which begins at 810, moves all the way up to these record highs at 2800, we can see that over the last week to 2 weeks, we have seen it drop from 2800 down to 1600, and that is a sizable drop. Gold has closed lower consistently for the last 5 trading days. While some of those days were perplexing, today there's a clear-cut answer for that, and that is a tremendous rally in the equities markets. All the composite indexes up over 9%, almost a 2,000-point gain in the Dow, and that's all under the hopes that the administration would implement some kind of fiscal stimulus. However, primarily, the reason we did see gold go lower throughout the week had a lot to do with dollar strength. If you take a look at the last 4 trading days, this, and this, we have seen a pivot, a key reversal, which occurred on March 9th. There is no doubt this has been a very tough week for gold traders. You can see the yellow indicating each trading day this week. We had consistent lower highs, lower lows, red candles. But there is a saving grace, and that is that it is Friday, and you have the weekend to recuperate and think about what we'll do next. The only caveat to that is it is Friday the 13th. This has been Gary Wagner, wishing you, as always, good trading. Have a great weekend. We'll talk to you on Monday for the next daily update and review. Bye-bye.